Welcome. Let's get started. If you have questions, just go ahead and put them in the chat. I think Lexi's going to be monitoring the chat, and if we need to answer it right away we will, or you can always email me, Kim at Storen Financial, and we will get your question answered. There is still a lot of guidance to come out. The new bill, the Consolidated Appropriations Act of 2021, they didn't give it a really catchy title. The CARES Act came out in the spring, C-A-R-E-S. This one didn't even get a name. So it's called the Consolidated Appropriations Act, CAA. It is 5,593 pages long, $900 billion of relief, and it took $1.4 trillion of the budget and reappropriated it towards relief. So it was massive. We're still trying to figure out what's in it, but here's a couple highlights. So we'll just talk on a couple different things. Couple things, there's 4 things that I thought were important that didn't make it in the bill that's been talked about a lot. It was expected to be in the bill and it did not get in there. One was direct assistance to the state and local governments. Didn't make it in there. There is a lot of assistance for individuals through the state and local governments, but there was no assistance directly to the state and local governments. So that was a little bit of a hot button. It's going to come later. The second thing is business liability protection. We're seeing our first bit of lawsuits come out where employees are suing their employers for not protecting them enough against COVID. And they're considered frivolous lawsuits, but they are happening. I've seen a billboard that's coming out with some attorneys saying, hey, did you not get protected by your employer? Call us and we can sue them. So Congress all agrees that they want some liability protection to keep businesses from and employers from these lawsuits. It didn't make it in this bill. So it still is out there. The third one was big, student loan deferrals. Student loans, if you had a government student loan, you didn't have to pay your student loan during all of this through January. They deferred the interest. They expected to extend that. They did not. So if you have a student loan, dang, you got to start paying on it. So I am so sorry if you got to start paying on your student loans. I don't know why it didn't make it in there. Everything else did. And another big thing, everybody expected this to be in there, and it was not. Required minimum distributions on IRAs. When you turn 72, you're required to pull money out of your IRA and do a required minimum distribution. The IRS wants you to start liquidating your IRA so it gets its taxes. In 2020, with the CARES Act, they stopped it for 2020. You did not have to pull money out of your IRA. And you could actually put it back in your IRA and not take money out. They expected that to happen in 2021. It did not. So for 2021, RMDs are once again back. You've got to do it. So get ready to do your RMDs. It's based on your balance as of 12/31/20. So that's back. Now, a couple different things. We're going to talk about individuals, and then we're going to talk about businesses. So depending on what you wanted to hear, I kind of tried to separate it out so that we're going to talk about you personally first. The big thing, stimulus. Now, it is called recovery rebate in all the tax law. On your tax return, you're going to see recovery rebate, but we all call it stimulus. So everyone called it stimulus. So they already started sending out checks, $600 per person. Now, if you were single on your tax return and you make more than $75,000, then that starts phasing out on you. If you're head of house and you make more than $112,500, it starts phasing out on you. Or if you're married, you each get $600 and it starts phasing out at $150,000. You also get $600 per child under the age of 17. Very important. In the first round of stimulus, everyone got $1,200. But if you were 17 and older and a dependent on your parents' return or somebody's return, you didn't get anything. I thought they would fix that with the second round. They did not. So 17 and over, if you're on somebody's return, you don't get a dime. I have no idea why they put it in there. I don't know why that's the way it is, but it's what it is. So you have to be eligible to get the stimulus, which means you're not a dependent on someone's return. You're not a non-resident alien. You're not in a state, a trust. In the first round, if you were in prison, you didn't get it. The second round, somebody must have lobbied for prisoners. I don't know what happened, but now prisoners, if they qualify, they get $600. So if you're listening from prison, congratulations, you get $600. Couple different things on the stimulus. It is calculated based on your 19 return, but it's actually reconciled and truly figured based on your 2020. So you're gonna see a couple different things happen. If you don't file a return, maybe you just get Social Security, maybe you're just VA veteran, you don't really are under the threshold to file, you can still get your $600. You just have to go on the irs.gov website, sign up through their EIP Get My Payment site. Now, a couple things. Let's say in 2019, your income was really high. And so you're over that threshold of getting stimulus. And so you didn't get stimulus or you got a partial payment. But in 2020, your income was lower. And so you would actually qualify for all of it. You actually get the remainder on your 2020 return. So on that 2020 return, they're going to match that up with what you should get. Now, what if in 2019, your income was really low and they gave you all the $1,200 and they gave you the $600, but in 2020, you go to file your return and your income is higher and you don't qualify. You do not have to pay it back. So it's kind of the best of both worlds. If you qualified on 19 or 20, you're going to get the stimulus. They didn't offset it. People have child support that they owe. People have student loans that they owe, back taxes. If you get a refund normally on your tax return, they take that refund. Well, they did not take your stimulus. Everybody got paid stimulus, whether they had offsets or not. So that's kind of an interesting thing. On your 2020, you get to like kind of settle up on your 2020. There was a lot of miscommunication in the very beginning. People thought it was like an advance on their refund and that it was going to lower their refund. It was just extra money and an extra credit. So any questions on that, let me know. Now, there was a situation in the very beginning because all the stimulus came out in April for the $1,200. If you had not filed your 19, it was based on your 18 return. So it was either based on 18 or 19, but it does get settled up in 20. So when you do your 20 return, you're going to see that. There is a really nice stimulus calculator on Kiplinger.com. Kiplinger is a great website. If you just Googled Kiplinger second stimulus check calculator, because maybe you were expecting to get $1,800 and you got $1,599. If you go on Kiplinger, it'll tell you what you should have gotten. And that will, you just need to have your tax return and they'll tell you. So that's kind of a nice little thing. I get questions on the stimulus. So I thought I would put kind of my top 4 questions on the stimulus. First one's first. This is on everybody's mind. I bet I've got this questions 50 times in the last couple weeks. You didn't get stimulus if you were age 17 or above on your parent's return. Or let's say you take a parent as a dependent on your return, they're not getting stimulus either. So the question is, hey, for 2020, can my college age student file their own return and get $600 because they're not a dependent on my return? You cannot do that if you qualify as a dependent of another person. So if you've got a college age student and they qualify as your dependent, which means they do not provide more than 50% of their own support, that makes them a dependent of yours. They cannot just pull themselves off and file their own tax return. So one of the biggest questions is, can you be filed as a dependent of another person? And if you can, then you don't qualify for the stimulus. So the IRS already has that in there for different credits. And so that's just all part of that, the same calculation. So no, you can't trick the system and you can't file your own tax return. That one is a biggie. The second one is you've had a baby in 2020. You didn't get it. They didn't know about it. It wasn't on your 2019 return. Do I still get it? Do they qualify if I had a baby in 2020? Absolutely. So it was estimated on 19, but it's truly calculated on 2020. And so you'll get that $600 when you file your tax return. So never fear, you get your $600. Third question. That's kind of a sad one, but if you lost your spouse or a child in 2019, will you get $600 for them? And the answer is no. Anybody that passed away prior to January 1 of 2020 does not get the second round of stimulus. Now, there was an issue in the first round of the $1,200. If you had passed away and they had filed an 18 or a 19 return, and they were listed on an 18 or 19, the IRS sent $1,200 to every person that passed away in 18 or 19. So the IRS said, oh, sorry, please kindly send that back. Nobody did. There's no way for them to get it. You just did it on your honor. So they asked you to send that back because that was a mistake, but you don't have to pay that back. There's no way for them to actually get that money back. So kind of interesting. Last one, divorced families. Oh my gosh. So this is a situation where if you are divorced and you are sharing the dependency of a child, so let's say you have a son and you're taking the son in odd years and your ex takes the son in even years, you got $600 because they were on your return in 2019. You go to file 2020 and they're not on your return. Your ex-spouse goes to file, but that child has already gotten $600. We haven't gotten all of our guidance on this yet, but really the consensus is that child's going to get $600 twice. So there's no way for you to go back to your spouse and say, hey, that was my money, give it to me. The IRS isn't expecting that to happen. So there is the case where they think children are going to get $600 twice. That's all we know on that right now, and that's all we got on that. Okay, let's move on to a couple other individual provisions. We'll move to business. Unemployment. Unemployment, there's two pieces to unemployment. One is the state piece. That's kind of very common. If you file unemployment, you get unemployment from the state of Indiana. The most you can get is $390. Well, during the pandemic, they added a federal piece. And so the federal piece came through and said, oh, if you qualify, we're going to give you up to $600 of federal money. So you got $390 for the state and $600 for the Fed. There were people out there making almost $1,000 a week in unemployment. That's $52,000. So that's why a lot of people weren't going back to work, because they were making so much money on unemployment. So there's two pieces. One, unemployment runs 26 weeks. They added 13 to it. So unemployment in the state of Indiana runs 39 weeks. The federal piece was going to run 34 weeks or until 12/31/20. The new law extended that to 50 weeks and allowed you to get it until March 14th. They did reduce it in 2021 to $300. So you're still getting $390 from the state, and you can get $300 from the Fed. So they lowered it just a little bit because they knew that people weren't getting off unemployment as fast as they should have. But they did want to continue to give people just a little bit more money for a couple more months, as things haven't really settled down with COVID just yet. So unemployment benefits. So when you heard in the news, like people's unemployment is running out, it's running out, that wasn't totally true. It was only part of the unemployment that was running out. So news doesn't always give us the full picture, as you know. Charitable deduction, charitable contributions. This came through in 2020. If you do not itemize on your tax return and you get any benefit for charitable contributions, they came through and said, oh, well, we'll let you take $300 against your income, trying to encourage you to give to charities. But that ended that was just really for 2020. The new bill extended that till 2025. So, I'm sorry, I didn't extend it until 2025. Until in 2021, they extended it, and now it's $600 if you're married. You can take that $600. $300 if you're single, $600 if you're married. You do not get it if you itemize. So if you itemize, you take all your charitable contributions over on Schedule A. So this was just a little bit of a spiff for people that don't itemize. So give away to charities, right, Diane? Flexible spending accounts. If you are an employee, you may be aware of flexible spending accounts, which is a benefit from your employer. And flexible spending can be for medical, or you can also have dependent care where you can pay for child care, and it allows that amount of money to come off your income and then put it into an account, and you get to spend it on medical or child care. So it's kind of a nice little benefit. Well, it's a use it or lose it system. So if you said, hey, take $2,500 from me, I'm going to spend it on child care, and if I don't spend that by 12/31, I lost it. Well, they came through this weird little benefit. I don't know how they come up with some of these things, but it said if you can't spend that by 12/31/20, we're going to allow you to carry that one more year and spend it in 2021. If in 2021 you got the same situation because you've got all this extra money and you can't spend it, we're going to allow 2021 to move into 2022. So it was kind of a different little thing, but it just for the next 2 years. So if you couldn't get child care, if your kids were home and you weren't spending it on after school care, well, now you can spend that in 2021, hopefully. So kind of an interesting thing. I don't know if anyone knew that from their employer, so I thought I'd throw that in there. There was a moratorium on evictions through January 31st. They extended that. And there's also relief out there for renters to help pay for rent, utilities, things like that. I don't have the website for you to get that assistance, but there is assistance through your states if you're a renter and you need help paying for your rent. So just a little thing out there. I thought I would throw in just a little bit of trivia because I get this question all the time, or people are always wondering. The IRS just sent out stats for 2018. Yes, 2018, the IRS is always a couple years behind on its stats, so they're not super relevant, but this is all we've got. Everyone's asking, so top 1% income earners, how much do they pay of the tax burden? In 2018, it was 40.08% of the tax burden. How do I get in the top 1%? In 2018, you had to make more than $540,000. So those of you out there that made more than $540,000, congratulations, you're in the top 1%. And then they always talk about the bottom 50%, how much they pay of taxes. In 2018, it was 2.94%. So 50% of the country paid 97% of the taxes. 50% of the country paid 3% of the taxes. So that's just how our system works. So thought I'd throw that in there, a little trivia for you. Before we move on to some business provisions. So if anybody has any questions on individuals or the stimulus, please email me. There's a lot of stuff going on. Businesses, employee retention credit. If you are a business, please sit up straight. I need you to pay attention. When the employee retention credit came out with the CARES Act in the spring, wildly ignored. It was almost impossible to qualify for it. Nobody cared about it. It was an incredible credit. You could get a $5,000 credit on the first $10,000 of wages you paid for your employee in 2020. If you, a couple different criteria, you could not take PPP money. And this is why nobody really cared about it. Almost everybody got PPP money when they upped the amount. So if you got PPP money, no qualification for the employee retention credit. Also, they said you qualified if you were fully or partially suspended. So if you were a gymnasium and you were fully suspended, you qualified. Or you qualified if you had a 50% reduction in your sales year to year. So for the third quarter of 2020, if you were 25% less than the third quarter of 2019, you qualified. But then nobody qualified if they got the PPP. So nobody really paid attention to it. Well, we're going to pay attention now. The new rule that came through in the new CAA bill took away the requirement of the PPP. So you now can qualify for the employee retention credit even if you got PPP. So let's go through this again because they have changed it and they have made it unbelievable. So employee retention credit, if you were partially or fully suspended by a government order, or in 2020, if you had a reduction in your sales by 25% in a quarter, there are some other calculations, but basically, 50%. So if you were down 50% in any quarter, you could potentially qualify for a 50% credit in the wages you paid your employees. So you could get up to up to $5,000 per employee for 2020. 2021, new rules. They've changed it to up to $7,000. In addition to the $5,000 that you got in 2020, you now can get $7,000 in the first quarter of 2021, and you can get $7,000 per employee in the second quarter. And they changed the rule for in 2021, if you can show that you weren't down 50%, you were only down 20 over the same quarter in 2020 or 2019, you qualify. And this is not a credit on your tax return, it's a credit against your payroll taxes. So you get the credit now. Very, very significant. You now can go back to 2020 and amend your 941s. There's going to be a cost from your payroll company, but it's worth it. So let's say in the third quarter of 2020, you were partially shut down and you paid an employee $8,000, you could get a $4,000 credit on your 941, refundable credit to your business. Now, fast forward to 2021. So if you think you're going to be down 20% over 2019, then start taking your credits now on your 941. So every deposit that you make, you get to take a credit back. So if you were going to make a deposit of $5,000 for federal taxes, you only have to make a deposit of $1,000. So this credit is $7,000 per employee each quarter in 2021. So if you're still partially shut down or restricted by the government, or you have a 20% reduction in sales, it is not and, it is an or. So if you qualify in either one of those. So if you're a restaurant and your in dining is closed down, but you can still do carry out, you're partially suspended. So you qualify. So nobody paid attention, but we're all paying attention now. So that's just a really brief overview of that employee retention credit. If you think you're in that category, research it, find it out, talk to your accountant so that you can do that on your payroll. Okay, let's move to the PPP. This is what everybody's interested in. Loan forgiveness, round 1 and round 2. So, PPP program. The new program is out. It's a new round. They've changed it just a little bit for 2021. So you have to have less than 300 employees, and you have to demonstrate that you've had a reduction in sales of 25%. So you've got to show in some quarter that you've had a reduction over the previous year of 25%. The maximum loan used to be $5 million, it's $2 million now. And then the money is available till March 31st or until it runs out. And so I think there's going to be another push for it. So make sure that you apply soon. Don't wait till March because I think the money might run out soon. Still not available if you opened your business after February 15th of 2020. But it's the same calculation as the first round. So you looked at 2.5 times your payroll costs in 2019. And then that's the same loan amount. So you qualify for the same loan amount for the second round. If you are in hospitality or food, you get 3.5 times your payroll. So you could get a little bit more if you're in hospitality and food. So worth looking into. You just got to show that reduction of 25%. That wasn't part of the first round. You didn't have to show any reduction in sales. It was just if you needed it, you got it. So the second round said there actually had to show a need of the 25%. So a couple other things that came through. Really, really important. I don't know if everybody understood this, but when the original PPP forgiveness came through They said, if you got forgiven your money, you have to pay tax on it. Awesome. But the IRS came through and said, oh, but if you get forgiven that money, if you had $100,000 in PPP that you spent on payroll, you don't get to deduct those expenses, essentially making it taxable, because instead of having your normal business and you lose those deductions, you now lose those deductions and you don't have that. And so basically it's taxable income. And then the IRS, they said, no, nobody wants that. That's not the spirit of the law. IRS doubled down on that in November and said, absolutely, no deduction for the expenses of the PPP forgiveness. So Congress had to put it in the bill. You do get to deduct the expenses. So now, if you have PPP money forgiven, non-taxable. They even went as far as to say it adds basis to you. It is, and how to report it, and it increases your at-risk basis if you're a partnership or an S-corp. It was a win-win for everybody. So it was awesome. They also added in there, in March or April, there's those little grants that came out. You got $1,000 per employee. That was taxable income to you. It's just a little $1,000 grant that you got per employee, up to $10,000. It just like showed up in your account if you're a business. They came through and said non-taxable. Same thing. Not going to make you pay tax on it. Also, if you had an SBA loan, in the spring they came through and said, oh, the SBA is just going to make 6 payments on your SBA loan. But it's taxable income to you and what the SBA pays for you. They came through and said, nope, we're not going to tax it. And they're going to let you deduct the interest and the fees. So, I mean, non-taxable, and you get the deductions. I mean, it's just a win-win all around for businesses. They did simplify the application for forgiveness. So it was like if you were under $50,000, you could do the 3508S. They increased that to $150,000. So you can do the little half-page sheet of paper, and it just says you spent the money and you're all good. So that was good. And then this is what Diane was talking about. They added in 501c6s, which is like chambers and non-for-profits. So Diane wasn't able to apply for the PPP last year for the Boone County Chamber. She can now. So they had a really nice lobby group out there, and they got them added. So if you had under $300,000 and 300 employees, and less than 50% of your income comes from lobbying, you qualify. So go Diane, man. Okay, this is a weird one that came out. I don't know where it came from, but it used to be that entertainment was 0 deduction and meals you got 50%. Well, the CARES Act came through and said, we're going to make that meal deduction 100% for 2020. The new law that came out extended it for 2021 and 22 and made meals 100% deductible. So they want you going to restaurants and spending money, and they're encouraging you to go spend money on meals. So just kind of a freebie thrown out there out of the blue. So just be careful. I know a lot of people on their financial statements, they like to put meals and entertainment, because for years and years, it was all 50%. And so any accounting software you got just loaded those two together. Do not put those together anymore. You should have meals on your financial statement and entertainment on your financial statement. So meals 100%, entertainment 0. So don't mix those together. An important, very important, little known law that came out with the CARES Act, I thought I would throw this in here because it's fantastic. It used to be that your employer could pay you, and you pay tax on it, and you pay down your student loans. Well, they came through and said, oh, well, instead of paying you and you paying tax on all that money, your employer can now just pay directly $5,250 towards your student loans. So if you made $50,000, they could lower your wages by $5,250 and pay it directly to your student loans. So before, your employer had to pay you like $8,000, you had all the taxes taken out, and then you put $5,250 for your student loans. Now, right off the top, no taxes, non-taxable income to you. And that was for 2020 only. They extended it through 2025. So your employer can pay $5,250 for 6 years against your student loans. It is a no-brainer. So if you have student loans, talk to your employer. It is a great deal. So, and it doesn't have to be $5,250, it's up to $5,250. So if you're making payments of $2,000 a year on your student loans, take it off the top of your income, have your employer pay it directly to your student loans. It's fantastic. So I have a lot of physicians, vet practices that are taking care of this, taking advantage of this for their doctors. Okay, so that was all that I was going to put in the presentation today. Now we just all need to go make money, pay a lot of tax. We want you to be good citizens. We want you to be in that top 50% of the system. Right, Diane? Right, Lexi? So please, if you have questions, email me, Kim@Storen Financial. I am happy to talk about, I can research if you're divorced and you got stimulus, or if you didn't get all the money that you thought you were supposed to get. Please email us. Tax season's coming up, so we're pretty excited. But then just remember, if you're a business, please look into that employee retention credit. It is a really nice credit for your business. All right, thank you, everybody. Appreciate it. Thanks, Lexi.
Thank you, Kim. Actually, we do have a question in the question box if you are open to answering some questions as they come through.
Bring them through.
All right. We have one that says, because some banks are slow to respond, are we allowed to submit PPP applications to multiple banks and then take the first offer?
The question is, can you submit multiple applications? And the answer is yes. However, the SBA is a big government entity. They have a lot of red tape. So if multiple applications come to the SBA, they will actually halt your application because they don't know what to do with it. And they don't know which one to approve. So if you have multiple applications that land at the same time, then absolutely. Now, if you have an application into a bank and they're not even processing it, then I would encourage you to go to another bank and process it. It gets to the SBA to prove it's done before this one gets over there. But if multiple applications land at the same time, the SBA will just go, they won't know what to do. So make sure you talk to your bank. If you're going to do that, then talk to the bank that you processed it with and tell them to just please stop that application. I know banks have been slow to do forgiveness applications. And then I know a lot of banks aren't going to do round two. So make sure you talk to them about that. And then some just don't have the capacity to do it. And then like I know Chase Bank in the beginning got so overwhelmed, they just didn't process anything. So just talk to your bank and see what's happening, but I would not put more than one application to the SBA at a time.
That's awesome to know. Thank you. We have another question. Do you have to have forgiveness before applying for the second round?
No, not a thing. A lot of people have not applied for forgiveness because they're waiting for that new $150,000 threshold. Just like I know that Chase Bank hasn't even opened up its portal yet for some people under 150. They didn't even have the opportunity to apply. So that is not, if you have not been forgiven, you can absolutely apply for the second round.
Awesome. Any other questions?
Kim, I have a question for you. On the employee retention credit, do you feel that, in kind of that target industry, definitely that comes to my mind is anyone in the hospitality, food, personal services, all of those that weren't able to do business. Do you believe that they will be aware of this, or is this something that hasn't been communicated clearly and we should share with anyone and everyone to make sure they're aware to talk to their tax advisors?
So the situation is kind of like what I told you. As a community, as an accounting community, we ignored it. Nobody did it because nobody could qualify for it because everybody got PPP. So nobody understood it. Now it came out in the new bill, but even I heard employee retention credit and I was like, oh, never mind. I went through a class and didn't realize that they took away that requirement of the PPP money. That if you got it, you didn't qualify. Nobody understands this. Nobody is looking at it. And so it is a credit that's going to go untapped because people don't know it's there and people don't know that it's changed to where it can be incredibly beneficial for your company. So I would encourage everybody to say, hey, go look at the employee retention credit. If you know another business, talk to them. Diane, if you you know, somehow you need to get this out to your companies because it's big.
Okay. And so I'll talk to you and your team about, you know, even if it's just that one slide or some sort of communication that we can really promote out there to not only our chamber members, but, you know, businesses throughout the region.
And unfortunately, when you read the stuff on employee retention credit, there's a lot of different calculations and it's a little overwhelming. And so people kind of zone it out.
Mm-hmm.
But if you can just get down to the meat, it is a really big credit. So a lot of people go to research it and they're like, ugh, and they just stop thinking that it's too much and I'm not going to do it.
We need a one-pager.
Yeah, they're going to amend their payroll filings. It's too much to calculate. And so they just don't go for it.
Okay. All right. Thank you for sharing that. And I'll contact you after this webinar too.
We do have another question. Just to confirm, we are not paying tax on the PPP from last year.
Correct. That has always been the case. If it gets forgiven, you do not pay tax on it. And you get to still take all the expense deductions for the payroll and the rent that you paid with the PPP. So you get the best of both worlds. It is free money. Nothing in this world is free, but this is pretty close to free money. Someone's got to pay for it, but it is free money. All right, well, thank you.
Thank you. If anyone has any additional questions, we also, I know Diane Hubbard's on this call, and you can contact Congressman Baird's office if you're having, you know, any trouble with the PPP or stimulus, you know, just securing that. They'd be happy to have a conversation with you. And their phone number is 317-563-5567. Any of this information, we're going to be sharing your deck. That's fine, Kim, the presentation today for review, as well as the recording webinar. So everyone that registered for this will get that information. It's good to most certainly refer back to. There was a ton of information. I think, you know, again, it's imperative that, you know, we're able to have that not just for ourselves personally, you know, or business, but, you know, to share with others also that may not be aware of this information. So the Boone County Chamber most certainly, you know, wants to be a part of that. So reach out to myself or to Kim if you have any additional questions, and we'd be happy to find you, you know, clarity on anything that you may have.
Okay, thank you.
Thanks, Kim. Thanks so much. Thank you, everyone, for joining in today. We hope that it was helpful to you all.